Hey everybody, so in this video we're going to do a very quick overview on taxing buybacks. So what do I mean by this? Well, in the Inflation Reduction Bill, they plan to place a 1% excise tax on stock buybacks. So how is this actually calculated? So when they say 1%, they're talking about 1% of net buybacks. So net buybacks is the shares that are repurchased minus any shares that are issued. So when I say shares that are issued, that's dilution. So essentially shares repurchased minus dilution times share price, and that will give us net buybacks in dollars. So what is the exception to this 1% tax? Well, that's going to be buybacks that are related to reorganization, contributions to employer benefit plans, buybacks under 1 million a year, which probably don't really happen a whole lot. So just a little bit of perspective here. So the S&P 500 companies spent a whopping 6.2 trillion in buybacks in the last 10 years. So if we take 1% of that, that is $62 billion. And that would have been $62 billion of tax money. So here's a sample calculation. So let's say Apple does 600 million shares of buybacks. Now Apple issues 100 million shares. So the net repurchase is 500 million shares. The average share price is $150. If we multiply $150 by 500 million shares, we're going to get $75 billion worth of repurchases. We take 1% of that, and that's $750 million that they're paying in tax. So why was this added to the bill? Well, Kristen Sinema, she did not want to remove the carried interest loophole. And they also wanted to preserve manufacturer tax breaks. So this excise tax was essentially to offset both of these. So is this excise tax actually going to matter at all? Well, over the longer time frame, that's a lot of money that's going towards tax. I mean, we saw that would have been 62 billion over 10 years. So does this actually matter a whole lot? Well, maybe not as much, but do keep in mind that companies like Apple, they've been purchasing over $20 billion in shares every single quarter over the last few quarters. So, if they're basically doing like $80 billion in buybacks, they're paying like 800 million in tax. So, that's kind of rough. So, we'll see if this excise tax actually matters or not. But, in the short term, it might not have all that many implications. But, obviously in the longer term, maybe companies might think of better ways to use that money instead of just do repurchases. So we'll see. Hope you guys enjoyed this video.